Down about 6.67%, 9%, 32%.
Buying crypto for the first time can be pretty scary. Here's how to think about investing in a safe way. Don't risk more than you can afford to lose. This is like the golden rule to all investing. It's a long game, not a sprint.
I put my entire life savings into Bitcoin and turned $42,000 into over $100,000 and then lost all of those profits.
Figure out what your budget is for investing based on what you can actually afford without it negatively affecting you. Make a plan and then stick to it. A plan might be something simple like having a price in mind which you'll definitely cash out at for highs and lows. That sounds super basic, right? But a huge problem most investors have is never taking profits. Chances are the market will move against you at some point. So when the going gets good, take some money off the table. Nobody ever lost money taking profits.
I'm going to cash out half of it, or I'm going to cash out 60 or 75%. And I was speaking to a guy at the time and he talked me out of selling any of it.
Some things to think about. Do you need to pick a price to exit? When will you decide to buy or sell? Write down these rules and then do not deviate from the plan.
So I didn't sell just because I didn't want to take the loss.
Diversify, meaning build out an investment portfolio that isn't concentrated in one economic space like crypto. No financial expert would tell you to build an entire investment portfolio with crypto alone.
And this is where I learned my major lesson: not to put all of your eggs into one basket.
For diversifying in crypto specifically, don't be tempted to go all in on Bitcoin or any singular crypto asset. A good way to hedge your bets is to invest in multiple different crypto projects to spread out your risk. Ideally, you want to invest in tokens that exist in different sectors, like DeFi coins or dApp projects, so that if one sector booms while another doesn't, you'll stand to benefit. Basic trading strategies can save you a lot of money, like dollar cost averaging, as opposed to buying all at once. Because of crypto's extreme highs and lows, split up your investment over several months to help average out the cost you're getting in on, so overall, it's cheaper. For example, if you have $5 to put into a crypto project you trust, space out $1 investments over January to April. And then there's your very best friend, stop losses, which is a type of exchange order that automatically withdraws your investment and stops your losses once it starts to dip past a certain point. This way, if the market tanks while you're asleep or away from your laptop, you won't suffer as heavy losses. Now, let's talk about crypto-specific tips. The golden rule for all crypto transactions is safety first. Never forget there are 1,000,001 scammers out there who are always looking to take advantage of newcomers.
First thing they asked for was my 12 password keywords. And I typed it in. That's where I messed up. You know what I mean? They're not gonna ask you for your 12 passwords. That's where I messed up.
Always, always, always use two-factor authentication when creating any online crypto accounts. Yes, it's tedious, but trust me, it works. Never make a digital copy of your seed phrases, no screenshots, no emails, and no text messages. Keep that stuff safe by writing it down on paper, make several copies, and keep them secure in several different spots. And finally, be aware of common scams like fake giveaways, trading bot scams, and phishing emails. If someone offers to double your amount of crypto for free, it's definitely a scam, and stay away. Lastly, as old Warren Buffett said, buy when there's blood on the streets. If you're just looking to buy and hold, the best time to enter the market is generally when everything's deep in the red and prices have crashed. Thankfully, this happens quite frequently in crypto, so you don't have to wait that long.